So before talking about a suitable investment option, is better you understand your investment objective. That objective should be what's driving your investment decisions, because there are some instruments or investment securities that are suitable for the short term, some better for the mid term to the long term, and it's important you do not mismatch them, because if you mismatch them, then you may not get the expected return that you are thinking of. So imagine you have a short-term goal and you're putting that money for your short-term goal into a long-term security. There's already an investment mismatch. So it's important that we do not only look at the return, but look at actually matching objective with the right securities. Basically, that's how I would say it. But of course, there are securities. I know treasury bills are trading at around 4-5% for a 365-day bill now, which a lot of people would consider very low. But of course, money market instruments are better suited for short-term needs. Bonds are trading between 10, 11, 12% levels, but of course they are more for the long term, unless probably maybe you are investing through maybe a mutual funds, which are more liquid instruments to put your money into. But of course, you can also consider equities. Yes, currently equities are low, but the risk in equity is also very high. But then also in the long term, we all know that equity always would outperform any other form of investment. Okay, in terms of models, yes, there are various models that exist, but the truth of the matter is one should always stick to the one that works for him or her. One particular one I usually make use of is the income expense formula. So you want to track all your sources of income, and you want to also track all your expenditure, most especially in the difference between your savings. But in doing this exercise, there's this thing that jumps up to you, especially when you start listing out all your expenses. You find out that there are areas where you feel you must have overspent, and areas you feel that you are spending that probably it's not in line with your objective. That way, you keep reducing on those kind of expenditure so that you can channel, or you have more money to save towards your desired objective, which is the most important thing in the first place. And it's not out of place for people to have a budget in place. And when people hear about budgets, they tend to think of something that is very restrictive, really, especially when they see organizations make budgets at the end of the year or beginning of a new year and all that, complex calculations and all that. The truth of the matter is, budget is not restrictive and it's not there to restrict you. It's just there to guide you on how you spend your money. So I see it more like a spending plan. And the truth of the matter is, if you are disciplined enough in keeping with your budget or your spending plan, you find out that you are able to track your expenditures and able to reduce on those areas and gather much money into your savings, and for you to invest in line with your set objectives. To me, I like to first of all guarantee my principal, because if I can't guarantee my principal, then there's no need talking about returns. Okay, and that's why I will go back to match my investment choice with my objective, and tying that investment choice to if my if my objective is short term, medium term, or long term, I'll match my investment choice to the kind of securities that are meant for the medium term or long term. So if it's for my goal is for short term and my objective is met or exit a short term investment and quickly use that money for what the purpose is for. Could be for personal development, could be for payment for house rent, it could be for upkeep during this period that we are all sitting at home and all. But if it's for long term, then be maturing in 2-3 years, 4, 5, 6, or even 10 years and above. So that would determine my entry into those kind of investments, and also that will also determine when I'm going to exit those investments. So that objective should be key and should be what should be the driving factor behind any investment that you go into. So if you observe the market during the course of this week, you see that some prices of securities went up, some went down, and all that. So the thing is, compared to where these securities used to trade before this COVID period, we find out that most of them are trading significantly lower. So you want to go in at any point where you feel that you are comfortable enough, such that when the market corrects itself, that capital gain, you will have benefited from it. But of course, we don't know how long this take. So I would say if you really do not have time to track your investments and all, and you just want to put away 1.5-2 million for the next 2 years, I think you should look at putting it in investments that's probably not too risky, since you need this money back. 2 years is such a short term. So for me, I would advise you look for a low to medium risk mutual fund investment option that can that is actively managed, that can help you meet your objective, and knowing fully well that at the end of 2 years you are able to get your money back. Every investment comes with some element of risk, and that's just the truth. So the ones you are calling safe investment, probably maybe the ones that the risk are probably minimal or next to zero, right? How I like to look at it, the investment, the securities that we have generally in the markets that we invest in, is so broadly can be classified into two categories. Either you're investing in equities or you're investing in fixed income. So equities are your stocks, and those ones are volatile, the risks are higher, right? Fixed income securities generally are securities that will give you some level of fixed return on your money, but the risk is lower, and those are the ones that people tend to call relatively safe kind of investments, because there's no volatility. What they promise that they're going to pay back to you at the end of the month or year is what you're going to get. So those fixed income securities are further broken down into bonds and money market securities. The bonds, okay, you already know bonds. We've been talking about bonds. Then the money market securities are further broken down into your treasury bills, commercial papers, even the regular fixed deposits that you have with the banks, basically. So those are the investment securities you have. The low risk mutual fund would basically invest in either bonds, money market, or a combination of bonds and money markets. Basically, those are still the investment securities or investment vehicles have low risk that you can consider in the market. I think there's still an opportunity in the Nigerian equity market. However, if you're investing in equity, you need to be sure you have the staying power, because equity investment is usually suitable for the long term. And like Ola already mentioned, you need to look at securities or stocks of companies that you know that their line of business or areas that they are into are still going to make money even in the not too distant future. So if you look at the economy the way it is, there are some organizations that are still making money, some industries that are still making money even right in the midst of this lockdown. The likes of the telcos, they are making money. The pharmaceuticals, they are making money. So you want to gain exposures in those kind of securities. You also want to look at organizations that currently are trading below their values. So, for instance, we know that banks, come what may, they are still making money right now to some extent, even though it is reduced, because most of the expenditures or spending that one would do are still going to make them through these banks, whether you like them or not. So you want to look at those kind of sectors that you know that are still making revenues at this point in time, and want to gain exposure into them in preparation for long-term. I'm stressing the fact that because it's equity, long-term capital appreciation. They always say that the best time to plant a tree was yesterday, but the next best time is today. So if you have not been putting a lot into your savings or having an emergency towards your medium-term and long-term plan, the buffer that can carry you through. Thank you.